Hello and welcome to our webinar today. I am very excited to be introducing a new premier sponsor, Kia Capital. Joining me today from the Kia Capital team is Eric Sussman, CEO and founding partner, Tanya Merchandani, VP of Capital Markets, Enrique Huerta, VP of Acquisitions, and Jeff McMullen, VP of Asset Management. Good day, team, and welcome. I'd like to hand over to Eric to start.
Well, thank you, Lee, for that very kind introduction. And good morning, good afternoon, or good evening, whatever time of day it happens to be when you are watching this particular video. Again, I am Eric Sussman. Next slide, Hugo. So I can't say I still look like this photo, but I certainly hope so. Anyhow, just very quickly, I am the managing partner of Clear Capital. And again, it's my pleasure to be with you today. My background speaks for itself. I received my undergraduate degree from UCLA, where I am an adjunct professor and have been for the last 25 years, and my master's from Stanford. Next slide, please. So let me just tell you about our agenda for the time that we have, which is fairly brief. Obviously, I will be spending most of my time with you introducing our firm, our track record, and kind of what we do and maybe what makes us different from our competitors. We'll talk about our acquisition strategy, and I'll turn that over to Enrique Huerta to do that. We'll have asset management discussion. Jeff will be talking about that. We'll certainly be, again, as part of our investor first approach, but telling you how we think about things and our investors. And then depending on our timing, Lee mentioned there, if, to the extent that we don't cover something that may be of interest to you, we'll have some Q&A to be determined. Next slide. So let me just talk a little bit about Clear Capital. As Lee mentioned, we are in the multifamily space. We essentially acquire value add opportunities, and through improvements both to the common areas and exterior properties or unit interiors, perhaps repositioning the property, in executing on that strategy, hopefully increase property revenues and cash flows and returns to our investors. I've been in this business for over 25 years now. Collectively, the partners have over 100 years of experience in this particular space. So our experience is long-standing and deep. As I mentioned, we acquire value add opportunities. Our strategy focuses these days on areas in the Mountain West, Southwest, and Sunbelt areas of the United States. And we find the most compelling opportunities in those particular markets, and Enrique will talk more about that with you. Our track record, I'd like to think, speaks for itself. We have about, well, we're approaching $1 billion under management now. Hopefully we'll achieve that in short order. And, you know, I'm grateful for the returns that we've generated, which again are there on the screen. We've achieved 21% average ROIs over our investment horizon. And if you ask me what I'm most proud about in all of our years in this business, we have never lost one penny, not one penny of investor capital. Through all these challenging cycles, including the financial crisis and the Great Recession, we remained unscathed. Part of it, I think, is being in the right space and identifying the opportunities in multifamily, and also doing I think, a very terrific job in our underwriting and specific asset evaluation. Our team basically is 20 professionals in Irvine and here in Los Angeles and in Westwood, very close to the UCLA campus. Next slide. So again, just reiterating some of the factoids I already kind of mentioned to you. I'm glad that there's a plus next to the $800 million. We are growing, and I think we're actually in the middle of our third or fourth acquisition this year, so we've been fairly busy. Our investor pool is over 300 accredited investors and family offices. And again, our portfolio now consists of about 4,100 units, if memory serves, again, throughout the Southwest, Sunbelt, and Mountain West regions of the United States. As you can see, about 20 properties to date, and more forthcoming. Next slide. So just timeline, as I said, collectively, the partners have over 100 years of experience collectively. And as I often say to my MBA student, the only constant in life is change, and markets, of course, change. And I think we can all appreciate that. So if you go back to the 90s, really the origins of our firm, we really were focused very much in Southern California on not just value add opportunities, but I would call them deep value add opportunities. Our typical acquisition would involve a circa 1920s to 1930s brick building, limited or no parking. And we sort of were very successful in being early, I would say pioneers, maybe a little bit excessive, but I really feel that way. We were very early to that market. But of course, once we executed on that strategy, people followed and we had to morph as well. So we sort of expanded. And of course, our investor base and our assets under management were also expanding, as you can appreciate. So we sort of had to sort of broaden out our strategy into other markets here in Southern California, the Inland Empire, principally Riverside, San Bernardino counties, if you're familiar, but where there were real opportunities to execute on our strategy on a larger scale. Since that time, we've moved into several other markets: Texas, Arizona, Colorado. We're moving into Utah for any number of reasons. Partly is just broad demographic shifts. Again, Enrique will talk you through some of our criteria in terms of acquisitions. But what's been happening in the United States, of course, is sort of what I call domestic diaspora. I should probably trademark that expression, which I seem to use all the time now. But think about it, is what's happened in the United States is because of the cost of housing and just demographic shifts, is we've had population moving inwards for, again, more affordable housing and whatnot. California has had net outflow of population for each of the last 10 years. New York is experiencing that same reality, for example. And of course, the beneficiaries of that migration have been these other markets in which we're investing. One last thing, and I'll pass the baton, is I read a really interesting article about manufacturing actually moving and shifting from the Midwest part of the United States into the Southwest. It's sort of interesting. So take Intel has a large factory in Phoenix. You may have heard of a company called Taiwan Semiconductor Manufacturing, and there's a huge demand for chips. They've announced their first US plant in Glendale, Arizona, as a matter of fact. So there is sort of this shift both in population, in jobs, and the rest of it from both the Midwest in terms of the manufacturing competencies and capabilities of the United States, and then the population shifts from the coasts inward. And that's been driving our strategy and will continue to drive our strategy as we move forward. Next slide. So with that, let me introduce Enrique Huerta, who heads our underwriting and acquisitions team. And Enrique, I will hide myself, which is a blessing to many, and I will pass the baton on to you.
Thank you, Eric, and thank you, Lee. Thank you, everybody, for tuning in today. My name is Enrique Huerta. I'm currently the Vice President of Acquisitions for Clear Capital. I'm responsible for basically anything transaction-related, A to Z, sourcing opportunities, underwriting and overseeing all the financial analysis, financial planning, and business planning for our acquisitions. And then, of course, negotiating and acquiring these opportunities on behalf of the company and our investors. In addition to that, I am overseeing our research team to monitor market trends, continually complete and update research, and truly, really, the bottom line for me is searching for opportunity and a little more return in current and new emerging target markets for Clear Capital. My background has always been in multifamily acquisitions from day one. During university, I spent a couple years doing internships and then have worked for development companies, private investment companies, always in the multifamily space prior to having the opportunity and being blessed enough to work at Clear Capital. So next slide, Hugo, please. Our current portfolio is truly allocated across these 6 states, with 4 being active today and 2 more, Oregon and Salt Lake City, Utah, being current markets that we're entering. And so within the next 30 to 45 days, we'll have a presence there. We've highlighted the regions that we're most interested in today, and for a number of reasons, which I'll share on the next slide here. But as you can see here, we started in California on the West Coast, made the leap over to Dallas, Texas, a little early. Now there's a ton of investor interest in getting into Dallas. We were there 3 years ago, and that's truly the theme I've seen for Clear Capital historically. While we don't call ourselves market timers, because markets can ebb and flow, and there's good opportunities in any part of the investment cycle, we do find ourselves oftentimes a little bit ahead of the pack. And so when we started buying in Dallas, that was a market that was already attractive, but not as attractive as it is today. The same theme goes for our following acquisitions, which were in Phoenix and then Denver and Colorado Springs. Already attractive markets, but really over the last 2 years have become even more competitive and attractive to investors. And now we are moving into Salt Lake City and Portland, Oregon, two regions, of course, that are challenging to acquire in. And then Portland specifically, a little bit impacted by COVID, but we feel that that's one of the strongest opportunities in the marketplace today. And so in addition to our presence on the West Coast of the United States, we are looking over the medium term, so over the next 2 to 3 years, to enter the Southeast, which many investors are also interested in. And we are finding compelling opportunities in both Atlanta, Georgia, Tampa, Florida, and in numerous other submarkets in this whole highlighted region, such as Nashville, Tennessee, and North and South Carolina. So if you invest with Clear Capital, rest assured you'll have geographic diversity and exposure to workforce housing across multiple, almost a dozen different regions and economic engines to power your investment portfolio. So next slide, please. Here we'll share with you some of the things that me and my team look for across every single market. We're a pretty lean team, but we cover a wide geography, and that's because I like to call us a tech-enabled company. We use a lot of software programs, new ideas, and we have some proprietary software internally as well that helps us manage, delegate, and really complete all these deal analyses in a timely manner and funnel it down to find the best opportunities. Some of the economic fundamentals, which are important for any investor to consider, are job growth, population growth, and the migration patterns that Eric mentioned. One thing we're very, very conscious of, and will only buy in a region that supports this fundamental, is having a very diverse employer base and various industries in the region. So if you recall the markets we're in, a lot of them tend to be extremely diverse. There's no major concentration of any one employer or any one industry to avoid major market shifts based on the whims of a company or perhaps an industry due to all the changes happening today. In addition to that, we monitor the new construction supply pipeline. We hope to focus in areas that are a bit more supply constrained, where it's not as easy to build new apartments, therefore ensuring a little bit of protection and continued revenue growth for existing apartment buildings. As home values rise, we see that rents rise, and if there's not a lot of new construction in the marketplace, the workforce housing properties are beneficiaries of that. And then one other thing that's always been important to Clear Capital, but is becoming even more important due to the current COVID-19 situation, is the cost of non-controllable operating expenses, specifically property taxes and insurance, both items which we've seen rise in price significantly over the past several years. And so we're really honing in on states today where we can manage those costs a little better and ideally have caps on some of those costs. So we can talk about that in more detail in future meetings, but for now, I can also share with you some quick property characteristics that we look for. Always 100 plus units. We look to find larger communities that can be managed efficiently with on-site personnel. And for me, location is the number one consideration. I look for what I call sticky locations, where if a resident moves in today, they can set up their lifestyle to be near a freeway to get to work, to be near their favorite restaurants, grocery stores, anywhere they have to run errands, maybe go to the gym and have some fun. And we want to be near all of that. So when someone moves in, they stay for a long period of time and they're very happy with their home, given the strong location. And then here's a quick insight into the types of returns that we're targeting in today's environment: a 12 to 15% project level IRR, 5 to 8% average cash on cash return, and a 1.4 to 1.85 equity multiple. These are return profiles over a 3 to 5 year period. Of course, that's subject to change on each individual opportunity, but generally speaking, here are the terms that we are searching for when we're navigating these markets. Next slide, please. And then lastly, I just wanted to peel back the curtain a little bit on our acquisition approach. These are some high-level numbers on the right side of the screen that we receive approximately 2,400 investment opportunities per year that are actually within the realm of what we would buy. We receive significantly more across the spectrum, including land, new construction, and other things we don't really focus on. But in terms of value-add apartment opportunities, we get about 2,400. Based on location and just some high-level disqualifiers, We remove about a quarter of those, and then we focus on the remaining 1,800 where we fully underwrite from start to finish those properties. From there, we'll probably bid on and tour about 180 properties, and we will invest in 4 to 6 per year. These are based on recent figures over the last couple of years, and we're constantly updating and monitoring these numbers so we can ensure that we have the adequate deal flow necessary to support finding these best-in-class investment opportunities. And I will share with you that we have a very strong relationship with many real estate professionals across the country. That way we receive both off-market, thinly marketed, and then direct-to-owner opportunities that a lot of other groups don't have access to, just given our long-term history and relationships with these individuals that procure opportunities for us. And then once we find the right opportunity, that's where really the due diligence process begins, and where we focus on the business plan and maximizing the value of these assets. And that is something our VP of Asset Management, Jeff McMullen, will dive into next. Next.
Thank you, Enrique. Thank you, Lee. I'm Jeff McMullen, VP for Asset Management here at Clear Capital. As VP, I'm responsible for Clear Capital's interstate portfolio and overseeing our third-party property management relationships. And our interstate portfolio currently consists of properties in Texas, Arizona, and will, as Enrique said, will soon be in Oregon and Utah. And we continue to look into new markets for new opportunities to maximize value and returns for our investors. Next slide, please. Next slide. Today, I'm going to tell you about our asset management department's role in Clear Capital's syndications, which essentially boils down to our due diligence, value preservation and creation, and then a proactive asset management approach throughout the holding period of the asset, which seeks to maximize value and return for our investors. Beginning with our due diligence, Clear Capital's due diligence approach is a thorough, comprehensive process designed to achieve 4 objectives. First, discover all deferred maintenance and or defects which might undermine the business strategy. Second, we identify any value add opportunities which may not have been recognized during the initial underwriting. Third, we acquire a detailed understanding of the property's residents and future resident pool in order to customize the business plan specifically for the property's target resident consumer. Fourth, we confirm deferred maintenance and capital improvement cost estimates for refining and finalizing the business plan and investment forecast. The way that we achieve those objectives are through a due diligence process, which consists of 6 components. We do an environmental impact report to ensure that there's no environmental contaminants on the site or a history of environmental contaminants. We look at a property condition analysis report, which gives us all of the as-is condition of the building and a forecast of all expenses for regular repairs and maintenance over a 10-year period. We look at the zoning report to ensure that the property is conforming to existing zoning regulations and that there are no outstanding violations. Those 3 components are done by a third party of ours, Partner Engineer in Science Incorporated. We also look at a property survey to ensure that there's no encroachment or other site concerns which may need to be addressed or might undermine the performance of the asset. Next, we do a physical inspection. That's 100% unit inspection to get a clear understanding of the condition of the units and the consumption of the units by the current residents. And then we do a complete file review, which includes a full review of all books and records. From the DD, we create our business plan, which ultimately the goal there is to increase the NOI. And Clear Capital has a systematic approach to preserving and creating asset value centered around the resident experience and prioritize as follows. First, we partner with and employ the best-in-class property management firms, which deliver best-in-class service to our residents. Second, we reposition a property to one of Clear Capital's three housing brands: Arise for our affordable product, Aspire for our workforce housing, and Apex for our residents who choose apartment living as a lifestyle. Third, we cure any critical defects, deferred maintenance, or critical defects which might threaten the asset preservation and our health, life, and safety of our residents. Fourth, we implement expense reduction strategies, understanding that each dollar saved from the expense line is a one-for-one dollar added to the NOI. The same cannot be true for a dollar added to the income side of the NOI equation. So fifth, we install revenue generating unit and community features and amenities. Beyond that first asset value preservation and creation part of the process, Clear Capital ensures optimal asset performance through active asset management throughout the holding period. So as I mentioned before, the first part of that is repositioning and rebranding implementation, which ideally happens in the first 120 days of ownership. Second, we have real-time and full transparency through Clear Capital's property and asset management software platforms, so that at any time our asset managers could drill down to specific transactions, either a rent payment from a particular resident or a payment that goes out to a particular vendor. We can look into particular work orders and see when they were reported, what was the matter and how quickly it was repaired. We also can look into any kind of resident feedback that we get through online reviews or elsewhere. So that real-time information really helps us to support and guide the team to ensure their success. We do weekly operational reporting and teleconferencing with our regional and sometimes community managers, so that we are keeping in touch with them on a weekly basis, understanding what their successes and challenges are, so we can guide them to success. Fourth, we do monthly financial reporting, and that's done within our asset management division and with our property management partners. Five, we do quarterly financial reporting, and that's done with the property management, with asset management, and with other departments within Clear Capital, and then out to our investors. Finally, we have, the sixth point is that we have biennial and ad hoc property inspections designed to ensure that the properties are in very good condition and consistent with our brand's standards. And seven, we do dynamic annual budgeting. So each year we're looking at the performance of the asset, looking at the trends in the markets and demands of our residents, and reassessing our strategic plan to make sure that we're optimizing the assets value to our residents and also then to our investors. So in conclusion, due diligence, value preservation and creation, and proactive asset management, Clear Capital, through these methods, asset management, Clear Capital does all that it can to ensure its syndications achieve the very best performance that they can, and that we deliver the very best returns to our investors. Thank you. And now I'll pass it on to Tanya.
Thank you, Jeff. Thank you so much for passing the mic my way. It is a pleasure to be here today and present to all of you at Global Wealth. My name is Tanya Merchandani. I am the VP of Capital Markets here at the company. Joined earlier this year, have the pleasure of having been a student of Professor Eric Sussman's at UCLA Anderson. Got to know him there, and then when I had the opportunity to work in real estate with my family, we reconnected, and I'm super grateful to have the opportunity today to be working with the firm. The majority of my experience prior to real estate was at Goldman Sachs in private wealth and working with high net worth individuals, and families and family offices. And there's quite a parallel in what I'm doing today. I love helping people. I love working with people, and I like finding opportunities for individuals to invest outside of the stock market. So it's a perfect harmony. Next slide. There are benefits, without a doubt, of investing alongside us at Clear Capital and investing in real estate. So when I say alongside, what I'm referring to is the fact that our partners, so Eric Sussman, who you met, and 3 other partners, invest their own personal capital in every deal that we do. At times, they're investing upwards of 10% of the equity in the deal. So when I say alongside, you're literally investing alongside our partners, which is meaningful. Like, we're putting our money where our mouth is. We want you to make money, and we want to make money as well. So we're aligned in our goals there. So specifically with investing in real estate, private equity real estate, and the benefits of that, one would be cash flow. So we typically offer a 6% preferred return. That's an annual 6%, but it's paid quarterly to our clients. So that's a great way to ensure cash flow if that's something that you're looking for. Secondarily, we offer 1031 exchanges. So, and what that typically means is we invest in an asset, a multifamily asset, and down the road, when we decide to sell that asset, we will offer clients the ability to invest in another investment property. So rather than having to pay taxes, they're able to defer those taxes. And finally, what investing in real estate provides is stability. And I mentioned the offering individuals the opportunity to invest in other things than the stock market. Look, the stock market has been incredible. I mean, there is no doubt the performance has been amazing. And I don't doubt that at all. And everyone should be invested in the market. That's not what I'm saying at all. But I do think that there is a place for private equity real estate in everyone's portfolio, and it's prudent to diversify. Private equity real estate has a low correlation to the stock market, and I think it makes a lot of sense in everyone's portfolio at the right amount, given your risk and return goals and objectives. Next slide. So why Global Wealth Partners? Why are we interested in partnering with Lee and her team at the company? In getting to know everyone, we have realized that there is a true value alignment. We both believe in putting our clients first. We both believe in offering clients solid returns. And we both are extremely focused on performance, track record, service. So to me, that's incredibly important in a partnership, and to everyone at Clear Capital. And the next reason we have listed here is transparency. Since we've been working with the company, it has been very clear to us that there should be no concerns with respect to investing with Global Wealth. We've connected with Global Wealth's clients. We've connected with Global Wealth employees, and we feel not only is there transparency to us in the relationship, but also to all of the investors. And that's critically important when you're looking at a partner to invest with. And finally, and frankly, it probably should be first and most importantly, is the international exposure. I mean, the opportunity to connect with investors across 158 countries, and that's absolutely incredible. We haven't found that opportunity elsewhere, and we're excited to take advantage of that with Global Wealth. What we found is international investors, yes, many of us put on the brakes in 2020 for the challenges that we faced, but there is a lot of cash on the sidelines, and international investors are thinking, okay, I need to hedge my investments, and how can I do that? So investing in private real estate is a great way to do that, not only private real estate, but in the US. So now international investors have the advantage and opportunity to take control of their own investments, choose where the money is placed, how it best works for them, and markets that were previously closed to the general market are now open, which is pretty fabulous. And we love that Global Wealth has figured out how to do that. It's beautiful, right? It doesn't matter where you're based. You can invest in institutional grade real estate in the US. That's brilliant. Congrats, Global Wealth Partners. Thank you so much for bringing us along the ride. We're really happy to have the opportunity to work with you and your investor base. Next slide, please. So Lee, if we missed anything, please let us know. Happy to answer any questions that you have.
Thank you very much, Tanya, and to Eric, Jeff, and Enrique for your time today. This has been a very thorough look into the workings of Clear Capital and how everything happens, and really excited to present you as a sponsor to our investor base. We look forward to the weeks, months, years ahead as we work together and bring not only the next investment opportunity that you have, but ones down the line, and really growing the relationship. So thank you very much. We appreciate all of your time and really being so open and transparent about who you are and where you have come from. Thank you.
Thank you, Lee. Thank you so much.
Yes, thank you.